What's up, traders? Todd here. Just want to continue the conversation. If you didn't watch the last video, maybe I'll link it up here. Go check it out. If you did and you're a little confused, good. I'd like to carry on the conversation. There's a lot going on as stock traders that we are and investors. It's so important post-pandemic to understand what's going on with the other asset classes that impact the stock market. It's not just equities. It's the other three major asset classes: commodities, currencies, and fixed income. And I find, I don't know about you, that a lot of investors are most confused probably by fixed income, number one, and then very much related, FX. Well, fixed income and interest rates, where the Fed moves rates on the short term, where rates are going on the long term, where the yield curve is going, very much driving sector rotation, not only that industry and stocks to be in. And that's the big question on the table. So I want to continue the conversation that we had on the last video and jump into what's going on with rates and what it might mean for the stock market. So you saw this chart last video. And the main takeaway here, there's a lot happening here, but this at the top is the yield on the US 2-year Treasury. Below is the 10-year Treasury. Now, the 10-year Treasury has the most impact on the American economy. It sets where the 30-year fixed mortgage rate goes. It sets credit card and auto loan rates. Like, that's sort of the benchmark interest rate. So really, really important. And then above us on the 2-year, that really is the driver of where the Fed sets interest rates, which is short term. It's the interaction between those two, which creates a lot of rotation and movement in the market. And the difference is the yield curve. And I have the yield curve calculated here just below, and this was done, I think I did this chart Wednesday or Thursday. And what's happening here, as I described this in the last video, the 2-year yield in July just made a lower high. So that means the markets are starting to price that because this one really determines where the Fed is going to set rates, maybe they're not going to raise rates in the September or the November meeting. Now, after the I'm looking at the right button there. After the Fitch downgrade, you'd think that futures traders would price in a lesser chance of a Fed rate hike, but they didn't. It only moved down like 2 percentage points. Like, it didn't care. I think September's like a 20% chance of a September rate hike, and November's about a 27% chance. So it really didn't do very much. Okay, so the futures market is starting to put in a lower high. So maybe the Fed is done in the short term. The 10-year yield is making a higher break here to new highs above 4%. And as described in the last video, that would be normally concerning because that's caused a major rotation out of the growth trade, which is what we'll talk about next, right? What stocks do you want to be in? Well, the interaction that I just described there is what it's called flattening the curve. And that's the title of the video. We need to flatten the curve. You thought I was talking about COVID, didn't you? Got you. Got to do a little clickbait every now and then, I guess. I'm not really good at it. I'm not even good at marketing. I just like talking markets and trying to figure out the right way to, the right side to be on of the trade that's put in front of you. I wish I could get on here and say trading's easy, investing's easy, and take this simple setup and you're going to crush it. It takes a lot of work. And it takes a lot of a lot of introspection, a lot of blocking out the noise and looking at what's actually happening. And it's quite a self-discovery process, as much as it is looking at what's going on in the environment around you. So I wish I could tell you it's easy, but it's not. But it's pretty freaking fun. Anyways, so yield curve is flattening, which is, I think, a good thing. And that's one of the big things that are calling, many bears are calling for a recession, is because of the yield curve inversion. Right now, it's moved up to about 70 basis points, which means the 2-year yield is only 70 basis points above the 10-year yield. And as I just mentioned, we're making lower highs here in the 2-year yield, so maybe that yield spread continues to tighten. Now, this one hurt my brain making, so I'm going to do my best to explain it. So don't feel bad if you get a little confused. What you're looking at here on the left scale in green, this is the ratio of Vanguard's ETF, their flagship growth ETF, divided by their value ETF. What that means is if this green line is moving down, growth is underperforming value, or value is outperforming growth. Okay, fine. So we sold off right down to the beginning of the year, January 2023, and then value began outperforming growth. And we know that's been the theme this year. Looking at Apple and Amazon earnings, man, I weren't too bad. I would say they were pretty solid. Apple earnings, 0.1% on margins. iPads were low, but I tell you what, I think there's a lot of people who skipped the 14 upgrade cycle and want to go to 15. And I'm very bullish on the Vision Pro. They're going to come out with lower price models. Bullish on Apple. Amazon crushed it. Their earnings report was crazy. So I would say earnings have been pretty solid so far. The market is at a very, I would say, precarious position, and I'll finish the video showing you where the technical position of the NASDAQ is. But back to the story, and I'm kind of ADDing here. It's all over this is just the kind of market we're in. So value has been underperforming growth. Behind here is the white line, which is the 10-2 spread. This is the yield curve, okay? The dotted white line here, the dashed line, that's the 0 point, that's inversion. And you can see as growth has underperformed value outperformed growth, that has been following the inversion of the 10-2 yield curve, okay? All of a sudden, growth started to rally. Yield curve did a double bottom at about 110 basis points or 1.1% of inversion. Now, with shorter term rates, remember that last chart I showed you, flattening or making a lower high, and 10-year yields making a higher high, that's creating a flattening of the yield curve. And when this thing tries to get back to positive, that's a flattening. And then as we go above the 0 line, that's called a normally shaped yield curve, which is lower long-term rates, higher long-term rates, right? So what is going to happen here? Is the growth value ratio going to stay elevated and continue higher? And is that going to encourage the yield curve to continue to flatten? Or will the yield curve continue to stay inverted, head back down, and pull the value trade ahead of growth sell off relative to value? That's the question on the table right now. Will yield curve catch up and go to a normal shape, which is indicative of an economic recovery, and that would allow value growth to continue to go up? Or is value going to continue to rotate in, come down, and we are still in a risk-averse situation here? So just looking at these value growth ETFs, just looking at the sector representation. So this is the VTV, this is the Vanguard Value that made up, the ratio I've just shown you. So, your 18% financials, 18% health, 15% industrials, 8% tech, very low, 6% utilities, 7, very, very broad sort of, value-based ETF. On the other side, the VUG, the Vanguard Growth, this thing is 20% consumer discretionary, 52% technology. I mean, look at all the big boys in here. The big ones in there in terms of growth. So just kind of showing you that one. On the rotations, right? So the monthly and rotations of the growth, the Vanguard family of growth ETFs. So what this means is this is showing a proper sector and market capitalization and growth value orientation. It's a rotation against the S&P. This is just a screenshot. I don't have the live charts set up for you. But you'll see that the mega cap growth on the monthly is rotating into favor. It's in the improving quadrant, which means we have not crossed this vertical line to get into leading, which means if this rotation is correct, we haven't even moved into the leading quadrant. And I've got data to show that once this rotation happens, it could be in the leading quadrant for 2 years. And hot on the heels is small cap growth and mid cap growth. So all growth stocks are rallying. Falling out of favor are your values: mega cap value, small cap value, mid cap value. So there is certainly there's a trend happening where growth is rotating into favor and really hasn't even gotten the leading quadrant yet, and value is coming out of favor, hasn't even really moved into the lagging, which is down here in the basement. The two that actually have small cap value and mid cap value have just entered, where mega cap is not yet. Okay, so thinking back to that yield curve, I would bet that we have more flattening of the curve. Okay, so here's the Elliott wave position. I'm just bringing out all the big guns here. I'm just talking out loud. This is how I go through the research process for our customers at Trade Analysis and my wealth management. I mean, I'm just showing you everything, man. I know for good marketing and to attract a lot of potential clients and customers. I should make things seem very simple and easy, and you can do it, no problem. It's just not me. I love y'all. I love the markets, but I don't care that much to grab that many clients and pull you in and say it's so easy. Only come to us if you want to work hard and use your brain, okay? Or at least respect a team of analysts who try to do that, use our brain anyways, how small it may be. So here's the question on the table with the NASDAQ after Amazon and Apple. Which wave 4 are we in? Okay, this is the primary wave count that I have coming from the beginning of 2023. I have us as the correction that began way back here in 21 is over. And the count, I think that's my primary count right now, is we go up in 1, pull back in 2, and then this is wave 3. So how far will this wave 4 go? Well, you compare the percent distance traveled in the same degree wave 2, and you do a retracement in wave 3. So motive wave allows me to do it very quickly. I just hit Alt 4, pin it, and Alt 4 again. So you're looking for the clustering of 4v2, 4v3. And all I just did is take a Fibonacci projection of percent distance traveled in 2 and project it off of 4. And then I did Fibonacci retracement 4v3. So you have a little clustering of support here in the blue guys, which blue means a little earlier shallow, 14,008 to 15,015. And then we could get down here into 14.5 to 14.2. Now keep in mind that there is a very big support level, which was the March of 22 high that is right here. Also was the 786 retracement of the all-time high down to the 2022 low. So this is really, really important, okay? Now we could just come down right here, test, maybe do a little stop run in here and then move up. There's another possibility. The implications are not that different. Instead of this correction squaring up against the March of 23, Feb to March of 23 correction, it might be a correction that squares up against this little April of 23 correction. At that point, I really think we'll hold those March of 22 highs. We have the same 4v2, 4v3 based on this degree. Support, shouldn't break above below 15,000 in that support area. Then we go up. At that point, then we'll have green 3, which is the minor degree complete. Then we'll have to deal with wave 4, and then we go up. Right. So I'm not sure which degree wave 4 we're in, either minor 4 that squares up against the Feb March of 23 or the April 23. Okay. So a lot more questions and answers. Thanks a lot, right, Todd? But hey, that's the market we're in. Hopefully we flatten the curve. And I think that will probably lead us to that second count I gave you, and there's going to be some good buying opportunities. All right. Hope that helps, guys. See you Monday. Hi, it's Todd from tradinganalysis.com. Thanks so much for watching. Listen, my team and I have so much to share with you in terms of our technical analysis or fundamental analysis, portfolio management tactics, trading in and out, maybe options, sector rotation. Let us know what's most interesting to you. Maybe drop that in the comments section and we'll do our best to work it in. Also, consider clicking the subscribe button and the bell icon to be notified when we put out new videos. And finally, you can check us out at tradinganalysis.com if you'd like to see us manage our real portfolios in real time. Thanks again for watching.